How's it going, everyone? It is Andre Williams, and what we're going to be doing today, we're actually going to be doing a recap of the penny stocks that I talked about recently on this channel. I've also talked about these penny stocks multiple times, and on top of that, I've told you guys that I actually have a position in them as well. Right now, they are up, but in regards to what their upside actually looks like, taking into consideration the analyst price targets and also the conditions of where the market is right now, there is some opportunities to be seen. So let's get started. So what I'm going to be doing, I'm going to be going over the average cost that I have in these particular stocks, but I'm also going to be giving you the cost that it was when I did it and covered it in my most recent videos. I feel like that is the most fair thing to do and the most transparent as well. So at least if you considered or you actually ended up getting into it, you would see the price that I'm giving you and seeing how much you're up percentage wise. All right, so let's get into it. So the first one is Drive Shack. I've talked about this stock multiple times on this channel. I actually love this company. So anyways, when I did the video, the price that you could have got Drive Shack at was at $2.61. As far as what the analysts believe, they believe this stock should be at least $5.17. The average cost that I got in at is $2.39. So now, as of the end of Friday, the stock is up actually 20.31%. So from $2.61, which when I did the video and I showed you the price that you can get in at, to where it got to $3.14. So automatically you could have been up 20%. But of course, there's still some upside since the analyst price target is at $5.17. And the best part about it is this is definitely a post-pandemic play. We already know that, things have changed due to C-19. One thing with Drive Shack, they had earnings recently. It wasn't the greatest, but they did beat expectations. So that's something to actually take into consideration. And you can only imagine after the vaccines get rolled out and things start going back to normal, this company has a big opportunity to take advantage of. So that's something that I want you to consider and also realize. So for the second one, it is Aptose Biosciences. So this is actually a stock that was in my 2 biotech stock video that I was saying, you really want to consider and take a look at. So what the average cost was in regards to on that video, sorry, not the average cost, what the stock price was, it was actually $3.62. Now it's at $3.95. So that is up 9% or 9.12%. As far as what the analyst price target is, it is $10.78. So this is another stock that has a lot of room in regards to upside. One of the things that I love about this company as a biotech company, they have a lot of products that they have in their pipeline. This is very, very important. And they have phases going on as well as far as trials. So these are one of the things that you want to consider and take a look at, especially with biotech stocks. You want to make sure they have things going through the pipeline. If they do not have things going through the pipeline, then again, as far as the price is concerned, from my experience, it barely moves. But in this particular case, this is something I feel like you need to heavily consider, okay? So when I did the video for those biotech stocks, I did say, which I'm going to get into the stock right after this one, that I'm already in it, but I'm kind of thinking about whether I should be getting into APTO or not. Well, at the end of that video, I just said, I was just going to get into it. So that's why my average cost is right around that $3.62 range to keep you guys informed. Now, last but not least is Dare Biosciences. So when I first got into this stock, I'm going to tell you guys straight up, I got in at the wrong point. This is a stock that I had that was on my watch list, and then it started gaining a lot of attention, because they started having successful trials and so forth. And they also have many products in their pipeline as well. So when I got in, I got it at $3. But luckily, I follow my strategy. And the strategy is I never take a full position all out on a particular stock. So what that means is I'll split it up into, let's say, 4 positions. So I'll say, I'm going to put in 25% now, 25% another time, 25% another time, 25% another time. This is what helps you not be left holding a bag or being in a stock at a high price and not being able to take advantage when it goes down, it is not a great feeling. You want to make sure you have the opportunity to average down. So that's what I actually ended up doing with Dare. So with Dare, when I first brought it to your attention, it was $1.92. Now Dare is at $2.22, which means that it is up 15.63% as of the end of Friday. As far as what is the analyst price target on Dare, it is actually at $5.20. So again, there's still a lot more room for upside for this particular stock. So this is kind of, I don't think I finished my point in that last part. But anyways, when I first got into Dare, I literally got in at around like $3. So I was able to average that down, and I think it's down to like, I think around like 215 or so forth. And you know what? I'm actually happy with that area, and I'm cool with that. So that makes me want to get into the next point. You guys are probably saying, hey, these gains don't even seem like that much. Like, isn't it like you want to get at least 50%, 80%, 100%, some cases 1,000%. Like, we've been in a very, very bullish market. So when you see things like 100% gains, 80% gains, 60% gains, even 50% gains, this is not commonplace. But what I want you to understand is appreciating the small gains, especially if you're doing short-term trading or you're swing trading. Because here's an example that I'm going to be giving you. So let's say, for example, there's a particular stock that you focus on. You know it like the back of your hand. So here's the thing. Let's say, for example, you aimed and said, well, you know what? I'm going to be making 10% since I know the support and the resistance area of this particular stock. My goal is to make 10% on the day. So over the span of an entire week, what is that? That is 50% profit with only 10%. If I tell someone, well, you made 10%, that is good, they'll be like, it's only 10%. But if you add that over a week, that is significant. Not many people are making 50% on the week in the stock market. So having a 10% goal is definitely not a bad way to look at it. And then tell me what it looks like after 2 weeks. That means you're up 100%. What does it look like after 4 weeks, right? You guys already know the math. Am I saying that you're gonna constantly be making 10% every single day? No, of course not. We have volatility and stuff like that that happen. But what I do want you to remember, if you could be up at least 100 to 200% on a stock that you're very well familiar with on the month, that is impressive. Very, very impressive, and it's actually doable. But you need to make sure that you're appreciating and you're understanding compounding, because that's the compounding of small gains. 10% every single day out the week is 50%. Let's say, for example, you're only making 30% on the week with your particular stocks that you're swing trading or you're day trading, right? 30% for the week. After 2 weeks, you're up 60%. On a month, you're up 120%. So please appreciate the small short-term gains. This is only for my swing traders and my day traders, of course, because that you're going to be seeing that I'm going to be doing swing trading in the 5K challenge already. And it's part of the reasons why I got this Discord if you really want to see me do it in real time. I will do recaps here on YouTube, but those are one of the strategies I'm going to employ along with options, and it's worked very, very well for me. And it's part of the reasons why I know you guys will tell me, hey, Dre, take a look at this stock, or can you talk about this stock? I take a look at them, I do the due diligence on them, but at the same time, when it comes to being profitable, it is so important to make sure there's a certain number of stocks that you focus on and you know them very, very well. Once you know them very, very well, then what can you do? You can swing those support and resistance areas and be very profitable while doing that. And then this is also great to do alongside of a long-term investment strategy as well. I won't give you guys too much in this video, but that's what I really want to emphasize and leave you with a thought for the day. We'll be talking soon. Peace.